Good afternoon, everyone. Thank you for joining us as we discuss what institutions need to do to operate on the blockchain. As you heard at the end of the last panel, there seems to be quite a bit of excitement as we move forward in this new world of blockchain and how it can affect and transform financial institutions and really transform how we operate. So today I'm joined by an esteemed panel, and I will let them introduce themselves. Glendy?
Hi, I'm Glendy Kam. I'm the Chief Product Officer of Tacit Group. Tacit Group is a financial technology company that provides private permission blockchain for institutions to transact real time. So far, we have transacted $2 trillion on private permission blockchain.
Hi, everyone. My name is Darius. I'm the founder of QCP. QCP is Asia's leading digital asset partner. We are a one-stop shop for all your digital asset trading and investing needs.
I'm Konstantin Richter. I'm the founder of Blockdaemon. We're the largest infrastructure provider in the world, and we're also the only company in crypto with 3 of the largest top 10 institutions in the world on the cap table, which are Goldman Sachs, JP Morgan, and Citibank.
So, Konstantin, I'm going to start with you. Obviously, specifically out of the US, there has been regulatory unclarity for quite a long time now, unfortunately, and that has affected how institutions are able to fully immerse themselves within the blockchain space. What do you see coming up in the number of years based on Trump's recent nominations of Paul Atkins and David Sachs?
Yeah, I always, I told my team when the incident of Trump winning the election is sort of as shocking in the inverse as FTX collapsing to the crypto ecosystem in the US. And so if you would have asked me a couple of weeks ago what my wish list would have been in terms of personnel and changes we would have liked to see in the regulatory bodies in the US, then they've been exceeded. I think our hope and expectations, there's the ones we have for Blockdaemon, and then there's the ones we have for crypto in general, are mostly aligned. Overall, first and foremost, we want tech-forward, friendly, and clear regulation, which was really the ask we've made to regulators and that we haven't gotten. And so the most important thing is clear distinctions of who's the regulatory body that regulates what and clear rules of the game. And so very basic. And I have no doubt that Mr. Atkins will help and provide those. And then second, we also are hoping, with specifically David Sachs' involvement, that America actually will catch up with what has ultimately been left behind, which is really the market leadership in crypto. And so we're hoping for certain tax exemptions, certain improvements around, and maybe accelerations around token issuance for particular entities. There's obviously, FIT 21, certain provisions that were just recently vetoed by the Biden administrations that allow large institutions to custody crypto assets. We expect those to pass relatively swiftly through a new Congress. And so, but it's still early. And so our assumption is that sort of by the middle of 2025, we'll have a much better guidance and already some concrete improvements.
Totally agree. Darius, bringing you in, obviously sitting in Singapore, the regulations in Asia generally have been far more advanced than what they are in the US, but having an office in the US, how do you balance those two with the more established Asian regulations with what is coming up in the US, hopefully?
So, I would say I would nuance your question with this, that it seems like the Asian regulations are a bit more progressive, but in certain ways they're a bit stricter as well. So, we are licensed in Singapore and about to get a license in Abu Dhabi as well. So I would say, comparing the two, in Singapore, the regulator, sees crypto as in quite a specific format. They see it as payments, so it's a payment license. So we are regulated for spot trading in Singapore. ADGM is unique and I think a lot more progressive in the sense that they see crypto not as a specific part of an asset class or a specific, a specific use case. But in this case, they see it as part of the capital market, right? So they don't see it as a standalone. It's part of the capital market. So, our license here is a capital market license. It allows us to look at crypto in a broader sense, not just payments and spot, it goes to trading derivatives, trading cross-asset, as well, with listed equities, commodities. I think that's something that is necessary and something that we're looking forward to, right? Like we were discussing with Constantine earlier, a lot more progressive and clarity, a lot more progressive regulation and clarity globally once the US starts to pick up on this as well.
Makes sense. Glendy, obviously at Tacit, you all offer private blockchain solutions for financial services. How are you all thinking about how that service will be adapted under new regulations?
So when we talk to clients and also our partners, I think it's really important that everybody wants to be able to follow the right things to do. So I agree with Constantine. Everybody's looking for the clarity. So clarity is really important. So for the institution that we're working with, what they are trying to do is to make sure that they build solution that is compliance ready, and also to make sure that transparency, accountability, and also privacy is built into the solution. That is really, really important part. So when Tacit work with our clients and customer, these are the really important part that we put into the product when we make the offering. And of course, when you're working in a regulatory environment, it's important to foster a positive relationship with your regulators.
Yeah, I mean, I think we can all agree the regulatory clarity is going to immensely help the space. But turning to more of what institutions need to adopt and implement better blockchain, that comes with cost savings. Darius, obviously you're very big on the derivatives trading front. How do derivatives trading solutions help institutions achieve cost efficiencies moving forward with the space?
So I think, what we've seen in the last 2 years is our client base changing in nature. I think, previously it used to be a lot of native clients or high net worth clients looking to explore the space. I think the people that we're speaking to now are more corporates, listed corporates, sovereigns. And I'm very sure that in the next 5-10 years time, every corporate, every sovereign is going to have Bitcoin in the balance sheet. So derivatives becomes very important here because it's no longer just a speculative market, no longer just store of value, so to speak, right? The space is going beyond Bitcoin as digital gold. It's starting to have an impact on debt financing. It's starting to have an impact on equity financing. So it's starting to change the way both companies and sovereigns think about their treasuries and their assets, right? So in this respect, I think what's important is to make sure that there are institutional solutions for them, for hedging, for return generation, for yield generation. And derivatives play a very, very big part in this. For Asia specifically, and in terms of the sovereign conversation, I think digital assets present something very unique. Two things here. For a lot of energy-producing countries, it presents an energy optimization tool. That's one. For putting mines beside the grid allows you to store energy in Bitcoin, an appreciating asset rather than in batteries. The second thing here, of course, is that for frontier markets that where their economies are dominated by local currency, it becomes a breakaway for them, to have Bitcoin as an asset which is easily interchangeable with US dollars, allows them to raise debt or financing at a much lower rate. The whole conversation, you can see that it's become a very capital market conversation and presents a lot of interesting opportunities.
Glendy, turning back to you, Tacit Pay has processed over, let me get this right, $2 trillion worth of transactions It's quite a number of a transaction value or volume. What lessons have you all learned during that time processing that amount of transactions, and how do you apply that going forward to create more cost efficiency for your clients?
So I think what make the TaskPay product be able to achieve that volume or the transaction amount is that when we first build the product, we build it with scalability in mind. So that is really important. That's the reason why the product can be able to scale and also perform. So this is the technology that is behind the TaskPay product. And then also very important is because we are working with all the regulated entities as our clients and partners. So building something with compliance ready in the product, that is also a critical part. Now, the product itself is, for a lot of the companies that's going to adopt blockchain technology or financial services company adopting blockchain technology, is very obvious. This is going to scale and expand. Just like in US, recently we have the regulated settlement network that was announced with all the major players like Citibank, JP Morgan, MasterCard, and also SWIFT participating. So this is to anticipate that all these financial services companies using DLT technology, they will be interoperable. They will be working together. And so this is also something that is important to keep in mind. Tacit is a project contributor to a regulated settlement network, and we proved that the use case that we have for TaskPay to be able to operate within a much larger network that is sustainable.
Konstantin, obviously, this region in the UAE, Abu Dhabi specifically, is growing quite a bit and is an integral part of this space with their regulatory frameworks coming out. What do you see as the unique opportunities and also the challenges with the implementation from institutions with blockchain technology here in this region?
That's a good question. I think I think for us, I mean, we really run underlying infrastructure. So for us, it's really all about enabling ultimately any financial institution to empower their customers, and that can be other financial institutions, wealth managers, that can be somebody who wants to hold any form of crypto with the ability to have a wallet, to facilitate a transaction, and to earn a reward, right? And so any financial institution that is looking to do so, we sell technology to, right? And so our wallet stack secures hundreds of billions of dollars in digital currencies, and we enable endless amounts of transactions and rewards that are earned in that particular infrastructure. So I think for this region particularly, the same is true, right? Like so, I think. And so there's this really two components. So one is institutional offerings that have consumers on the other side of it. And then there's also institutions who want to ultimately custody and hold crypto for their own good, right? And so, and when you hold custody, then you need a wallet solution. One of our largest products ultimately is an institutional grade MPC infrastructure that's on-prem that allows any institution the policy layers and the technology to manage their treasury of crypto assets. That's a product that companies like JP Morgan or Citibank or NASDAQ, companies like that actually use. And so that's something we're very actively deploying here. So we're licensed here in Abu Dhabi, and we're very excited to participate in the market here.
Just to stick with you on this, obviously, Blockdaemon, you all have introduced the Node Operator Registry standard for Ethereum. How does this initiative enhance institutions' trust and participation in blockchain space? Because obviously, for institutions, they have far greater regulatory requirements and risk management necessities. How does this factor into that to enhance adoption?
Yeah. So because we run so much infrastructure, one of the things we've learned from our institutional customers, we're a pure B2B provider, so we run infrastructure for these institutions, and they make us go through really lengthy procurement processes. And so we've just learned so much about their requirements that they make their third-party vendors go through. And we really just ultimately spend time educating the crypto industry on what those requirements are, right? And so specifically for validators and crypto tech, a lot of the our competitors on the crypto side are a little more crypto native and maybe not as experienced in operating and dealing with institutions of that scale. And so we just really share that knowledge, right? Like, what does that mean to run failovers around the world, to have 24/7 customer support around the world? What does it mean to ultimately have insurance products to guarantee the infrastructure that you provide? I think that's a really core requirement that we like to share with the industry to make sure that ultimately, we don't have, at least on the technical side, failures for crypto, which is important for the reputation that ultimately has taken some hits in the past. So, yeah.
So we have about a minute left. So quickly, from each of you, Darius, I'll start with you. What do you see in the next 3 to 5 years as really being the next advancement of adoption by institutions, and specifically for you within the derivative space?
Absolutely. So this year has been remarkable for derivatives and for the space as a whole. Starting with the Bitcoin ETFs. I think the way to see it is, talking about Sam and FTX, he tried to bring the whole world into crypto and try to get everything to trade on FTX. I think the key here is, for crypto guys, is how do we bring our product to the rest of the world, right? Put it on distribution channels and put it to where the liquidity is, right? So ETFs, ETF options, Bitcoin proxies like Coinbase, MicroStrategies. I think there will be a MicroStrategy equivalent in every single market. And we'll be trading derivatives on those as well. We are already doing that in Japan with MetaPlanet, for example. We'll see the same, and I think that really that's where the liquidity is going to go, and that's how we scale.
Wendy, final thoughts?
I think the blockchain technology is going to become ubiquitous in financial services firms and institutions. And as you can see that right now, all the large corporations, large mega banks, they are all using this technology. But I think it's going to be spreading to even like maybe mid-sized banks, regional banks. We are seeing a lot of interest in adopting the technology. And that's why interoperability become a really, really critical part.
Konstantin?
Yeah, I'm excited about the future also of AI agents on crypto, where ultimately blockchains and wallets will be auto-generated by software, and you will not even know that you're using any of these things. And so I think that's going to be really, really fascinating. And you will have tokenization, hopefully for companies even like us. Like, we're thinking about going public, and I'm hoping that in the US we can do so via token sale really soon,
Well, hopefully we will get there. Thank you all. It was great having you on the panel, and enjoy the rest of your day.
Thank you for moderating.